Basic concepts. We are going to study the fundamental elements of trading tools, which will be the cornerstone over which the foundations of knowledge of investing that we acquire through this course will be laid. These are the basic fundamental concepts. If you already feel comfortable with these concepts, you can go on to the next chapter whenever you wish. Charts. The first piece of information that a trader will have access to will be the share price chart. In this chart, the evolution of the share price is represented over a period of time. Observe that each unit of time is represented by a bar. These bars can symbolize the price a share has had in a month, a week, a day, or an hour. Normally, we work with bars that represent a day. That's to say, daily bars. We are going to analyze a bar in more detail. We can see that the bar is made up of 4 basic parts. The small notch on the left represents the opening price that a share had on this particular day. The vertical bar represents the maximum and minimum prices that the share has reached during this season. Finally, the notch on the right represents the closing price of the share on this particular day. For example, on this day, the share opened at 105 euros. Next, the price dropped to a minimum of 104 euros and 20 cents, to then bounce back during the session to a maximum of 110 euros. Finally, the share closed for the day at 106 euros and 60 cents. In the case of the closing price being less than the opening price, we would have a bar like this. The horizontal axis of the chart is divided into constant units of time. In this one, for example, we can see that each mark corresponds to 1 day. Therefore, this is a daily chart. If each mark represented an hour, it would be an hourly chart. If it were a time period of a month or a week, we would call it a monthly or a weekly chart respectively. Long-term investors would mainly study the weekly and monthly charts, changing to daily to look for optimal entry points. On the other hand, short-term traders or day traders, also called intraday traders, mainly use hourly charts. The vertical axis represents the share price. If we look at it closely, we can see that it is divided into intervals of the same size. In other words, there is the same increment in price at each line, 5 euros in this case. If from this point the price increases 5 euros, we have to go up a line to mark the price. If it goes up 10 euros, 2 lines, etc. In this type of chart, the distance is the same between 50 and 55 as it is between 85 and 90, 5 euros. This type of scale is known as a linear scale. There is another type of scale that is very common in trading, and that is more advisable to work with. The logarithmic scale, which is the one we will be using throughout the course. In this scale, the percentage of price increase between each interval is kept constant. We will look at an example in order to understand it perfectly. An increase from 10 to 20 would have the same distance as an increase from 20 to 40, due to the fact that in both cases the increase has been 100%.